Assalamualaikum and good day. Welcome back. This is part 2 of lesson insurance. Now, let's talk about underwriting. Why insurance companies have underwriters? It is because they evaluate your risk and exposures. The underwriters decide how much coverage you should receive and how much premium you should pay for it. Underwriters can advise the insurance company whether to insure you or not. If you are interested in insurance but you do not want to become a salesperson, you may become an actuarist. The requirement is normally having a good maths background or taking actuarial science courses. Let's say Mr. Rahman is an actuary. So what does he do? He analyzes financial consequences of risk. It means if a client is involved in risk, Mr. Rahman will calculate his or her financial impact. Now, let's look into life insurance. Remember, life insurance provides coverage for sudden death and illness. There are 4 types of life insurance: ordinary, group, credit, and others. Under ordinary life insurance, there are 5 insurances. Let's look at example. Mr. Chong is a lorry driver and in the B40 group. He plans to have insurance, but he is on budget. Which ordinary life insurance suits him? In this case, Mr. Chong can choose term life insurance because term life insurance provides high coverage at a cheaper premium. However, Mr. Chong must know that this type of insurance will only cover for a specific period and it has no savings elements in it. Now, look at Puan Bibah. Puan Bibah is a nurse and in a low M40 group. She plans to have life insurance and she has a bit of extra budget. So which ordinary life suits her? Puan Bibah can choose whole life insurance because when she pays the premium, not only will she be covered by the insurance, her money will also be invested. In this case, whole life insurance provides dual purposes: coverage and investment. There is no expiry period and the coverage runs as long as Puan Bibah pays the premium. Okay, now let's look at Mr. Loges. Mr. Loges is an executive and belongs to the M40 group. He wants to buy insurance for his son's education and he doesn't mind adding on a bit of money to the premium. So which ordinary life insurance suits him? In this case, Mr. Loges can choose endowment insurance policy. It provides term life coverage, but with the extra payment, he can choose for savings as well. With term life character, Mr. Loges only pays insurance until his son reaches a certain age. Once his son reaches the age, Mr. Loges gets the benefits of savings since he too pays extra for investment. Ms. Susanti wants to do like Mr. Loges, but she wants her investment portion to be put into a sub-account, normally a mutual fund. In this case, she can pick variable life insurance. How about universal ordinary life insurance? Universal life insurance is a policy which allows the excess of premium payments, if it is higher than the cost of insurance, to be credited to the cash value of the policy, which is credited each month with interest. To recap, there are 5 types of ordinary life insurance: term life, whole life, endowment, variable life, and universal ordinary life. For you, which one will you pick? Discuss with the insurance agent about the coverage, the payment you can pay, and also the investment part. Now, have you heard of insurance berkelompok? In English, it is called group health insurance. It covers a large number of persons under a single policy. If you work, your company must have this. So, who pays the premium? Both employer and the employee cover a share of the premiums. Now, how about credit life insurance? This life insurance protects lenders against borrowers' death prior to the repayment of a debt contract, such as mortgage or car loan. Consider this. Pak Abu bought a car and he needs to pay the loan for 7 years. Suddenly, Pak Abu died in the 5th year of payment. Luckily, Pak Abu bought credit life insurance. The insurance covers Pak Abu's debts in the event of his death. Consumers often are not even aware that they have the product because it tends to be bundled with the entire credit offering. But again, ask your car dealer about this type of insurance when you want to buy a car or property, okay? Viewers, we have finished on life insurance. Now, let's see property and casualty insurance. Property insurance involves coverage related to the loss of real and personal property. Casualty insurance, on the other hand, offers protection against legal liability exposure. There are several insurances under this type. We have fire insurance, which protects your house against fire and lightning. We have homeowner multiple perils, which protects against multiple perils such as storm, explosion, riot, or civil commotion, or vandalism. Commercial multiple peril is similar to homeowners peril, only that it benefits business owners. We also have automobile liability and physical damage, which provides protection against losses due to something happening to your car like theft or damage. So, I hope you are clear about insurance and the two main types of insurance. Insurance is very important since it could protect us and our property in case of unfortunate events. Be sure you are protected because building assets are difficult, but losing it is easy. So be sure again to protect them to avoid big losses. In the next video, see you.